Oh, good evening, good evening, good evening. You can hear me, let me know. So just wait a little bit more for people to join us. And and then we'll kick off. Oh, good evening, good evening, good evening. You can hear me, let me know. So just wait a little bit more for people to join us. And uh and then we'll kick off. Oh, good evening, good evening, good evening. You can hear me, let me know. So just wait a little bit more for people to join us. And and then we'll kick off. So if you can hear me, you can just drop me a message on the chat box on the YouTube live. Oh, thank you, Inka. Thank you. So we soon kick off. I want maybe more people to join us, and then we kick off, I don't want to I don't want to be going over the same thing over and over. So good evening, Mr. Oyewole. Okay, cool. Thank you. Thank you for that response. It makes my job easier. It kind of make my job easier. Sometimes you want to this technology thing, you will you need to know what's going on. So and if you don't get a response, so you might not know what is actually going on. Good evening, Matthew. Good evening, Inka. So one of the things we're going to be looking at today, like we normally do, is to actually look at what the market did last week. I was having a discussion with somebody during the week, and I said a lot of people don't take trading serious because the entry entry barrier, or let me use that word, or entry price to trading is very low, right? What I mean by that is that it's easy to start, to get into trading. If you say I want to learn how to trade, online, it's so easy. Within 5 minutes, you can open, an account with a broker, whether you want to trade stocks, whether you want to trade cryptos, whether it's indices, whether it's futures, whatever you want to trade, whether it's forex. It's very easy to start. So the entry barrier is very, very fast. And then when you can open an account with a broker in less than 5 minutes, download the platform and you fund. Within 10 minutes, you have started trading. So because of how easy it is to start, a lot of people don't take it serious. A lot of people don't take trading serious because of the entry. It's very easy to start compared to say you want to become a mechanic. And we know that the purpose why you want to become a mechanic is so that you can earn a living, right? And the truth is the purpose why you want to start trading so that you can also earn a living. So if you want to become a mechanic, you know that you will go through some process. You can't just tomorrow and start and say I want to become a mechanic. Or let's say you want to become a nurse, for example. It has process, right? And it has time. You spend time. So, but because of the way trading is portrayed online today, people approach it with a wrong mindset. So maybe it's for me. Somebody will just send you a link. You just open an account, you just download the platform. You fund the account with $20 and you have started trading. And because it's very easy to get into to have access to trading platform, people don't really give enough thought to it. They don't plan, the way they ought to plan. I'm a victim as well. When I started trading many years ago, we just download baby pips online, and then we started reading, and then in less than a week we've opened an account. I watched some videos, and that is it. So nobody told me that it's a process that it to take time for me to be profitable. I just saw people posting stuff online with in their Lamborghini and all that, and buying houses for money they purportedly say they made from trading. So it makes me feel it's that easy. But the truth is, the trading industry is a big industry. We are talking about $1 billion industry, running to even trillions when you now combine stock markets and you add the New York Stock Exchange. You are talking about trillions of dollars. That people trade on a daily basis. On Forex alone, people trade trillions of dollars on a daily basis. So that should tell you that it's an industry that you want to take serious. And if you take it serious, you actually make money. That's why and one of the things I'm trying to portray in this community is to let us see that seriousness in trading. And that's why on every Sundays, right now, I'm supposed to have a meeting, with some people. I had to tell them that I want to shift it. All right. Because of this community, I want us to see it as a very serious thing, as a community. Because it's serious. That's why on every Sundays, I love for us to come together like this before the market open, so that we can look at the market and see, what are we expecting the market to do for the week. You agree with me that last week we look at Euro USD and Pounds USD. In fact, all the USD based currencies peers, but we started with DXY. And then you can see that, what we actually emphasize that is going to happen. I don't like using the word predict when it comes to trading. I'd rather say, something you anticipate. Some of the things that we anticipated that is going to happen. If I go to Pounds USD, remember on Monday, I remember it was on Sunday, this candle, we have this candle, this one last formed on Sunday, last week Sunday. This was Friday, Thursday, Wednesday, Tuesday, and Monday. And I was saying that we should see a crash from here. Because this candle, if I go to the 4-hour time frame, let me go to the 4-hour time frame. Yes. So last week ended here. That's 2 weeks ago ended here. After this candle, after this long bearish engulfing candle. And I said after market open that we should see a push down to the downside. And I posted my results on the group, on the WhatsApp group and on the Telegram group. I took a sell for me. Immediately the market open and I saw, I think some couple of hours after the market open, I sold from there. And then I rolled that move up onto this point. I think I came out around there when I saw the market is pulling back. I was actually expecting the price to come. Remember that Sunday, that was last week Sunday, that I said, our swing structure, don't forget that we'll be talking about, I've thought about market structure. And I said our swing structure is from this point to this point for Pounds USD, that I expect price to do this. I actually expect price to come all the way, either tap into the 50% retracement or come into the discount zone before we have this pullback. But from what we can see on, I think it was on Thursday, we have this pushback, this one right about here, this bullish engulfing, that bounce back. But then, if you ask me for this week, for Pounds USD, I'm out of this trade anyway. I made some good profit from this trade on all my accounts. So, but then I'll be waiting for to see what price we do around this area, because most times, don't forget market structure. We said price will do this. Price tap into our structural liquidity. Don't forget our structural liquidity that I highlighted there. So, and the price pullback, broke structure right about here, and further broke structure down here. And then we'll have this pullback, this nice pullback. So immediately I saw this nice pullback on Friday, I knew we are coming down. And the price do this. don't forget that this is our market structure, basic market structure. So you expect price to come here and tap into this new new structural liquidity that just formed there, and then push the downside before we do this, right? So this is what I'm expecting for market to do, and that's exactly what is playing out, as you can see on this daily time frame. On, you know, we have a sweep of this previous high. If you go back, there's a previous high somewhere around there. This one about here, we already have that sweep taken out. So price is now pulling back. So what is happening here is actually normal. According to market structure, this is normal. You have price to do this. Price to do this. All right. Price will take out the previous side, form a break structure, and we say that this structure that was broken. Let me redraw it. Let me do this again. So we say normally this is what price would do. Price will do this, right? So this become our protected eye. This become our protected eye. The price will now do this, and then continue to the downside, and then come back. Before, most times we take out this structural liquidity before we go to the downside again. But because pounds USD is bullish, if you look at what pounds USD is printing, any sell right now is a pullback, is like a retracement. So but because pounds USD is bullish, I actually expect the uptrend to continue. But then before that uptrend continue, I expect a further pullback. But because of what is coming out this week that we are entering, we have the FOMC meeting, interest rate. I'm going to talk about that in the course of this meeting, you know, before we finish. The interest rate by the Federal Reserve that will be cut, that will be reduced starting from next week on the 18th, which suggests that we are going to see that dollar will be weak. But then I actually strongly believe that has been priced in. The only thing that will change dollar being that will let us see a major breakout from here is when the anticipated interest rate is people majority of a lot of traders and a lot of those that are in the know are expecting the Federal Reserve to cut the interest rate by 25 basis points. So if, however, we have them, you know, cut interest rate by say 50 basis points, let's even go there. Let's even go to the Fed watch. All right. If you look at my chart, if you look at where this website where I am right now, is known as the Fed watch. So you notice that September 18, which is on Wednesday, so it's going to be the first interest rate cut since 2022. It's been 2 years now that the interest rate has been, that we're anticipating that there's going to be a cut in interest rate. And normally, anytime there's a cut in an interest rate of any country, you have the currency becomes weaker, because what that means is that the central bank, or in this case in America, the Federal Reserve, are going to make more money available to people, to investors, to industries via the banks. That means let's say you have been paying, this is just for an example. In America, for example, the prevailing interest rate is about 5.5%. So that means when you borrow money, bank will charge, that means you're going to pay interest rate of 5.5%. But now they are now saying that, you know, when you borrow money, maybe you'll be paying like, I'm just saying, for example, maybe you'll be paying 4%. You know, more people will be interested to go and borrow money for the bank. And during the crypto paid group webinar that we had last week, I spoke about during the COVID period when interest rate was very cheap. A lot of people were just, you know, going to the bank to borrow money. And I also spoke about the Japanese yen. You know, for many years, you know, the interest rate was near zero. So what people would do is they'll borrow money from Japan, run into billions of dollars. Then they will take it to America and invest it in America. Imagine you are borrowing money from somebody and the person is saying, I'm not going to charge you for any rate. You are not paying any interest rate. that is free money. And the person just saying you can use it for so amount of time and return my money. If I shrewd business person and you know what you're doing, you will know that you make a lot of money from that money. And the person says, okay, I can borrow you $2 million, $5 million. You're not paying any rate. So that's free money, right? So what normally happens is that anytime there's an interest rate cut, there is always the currency becomes weak because there's now more money in circulation for people to do whatever they want to do with it, right? So people are expecting 25 basis point interest rate, as you can see, between 475 to 500. This is about 25% basis point reduction, right? And you can see that we have 50% of people predicting. As of last week, I think this was about 40%, but now it has gone up to 50%. All right. Then we have another one that will interest reduction will happen. Another meeting in fact is 7th of November. We have 50% are saying that they are expecting 25 basis point as well. Then we have another one. So we're anticipating like 3 this year. So what that tells you that risk asset like Bitcoin, like stocks, will we go up. S&P 500, NAS 100. They are going to people will be investing, and I'm going to show you in the Bitcoin chart. I think I shared with people last week as well. In 2021, when they started cutting interest rates, what we saw was that Bitcoin price took off like crazy, because now people will borrow money and they'll be looking for what to do with it. So they will be able to. So they'll be buying risk asset like Bitcoin, like other other indices. They want to now pull out money to borrow money to do all those stuff, right? I'm going to show you during the course of this meeting on the Bitcoin chart so that you see it. You see what I'm saying? So on Wednesday, if you look at based on what I just shared on FedWatch, if you look at what we have on Forex Factory, you see that the anticipation is 25% basis point, as you can see. This is the forecast. So, but Paraventure, the Federal Reserve now wants to change their mind, now wants to shock everybody. If they do 50% basis point, because the market is anticipating 25% basis point, it's going to be crazy. But if we just see 25% basis point, we might not really see any difference in the market. Actually, it might not actually move the market, because this has actually been priced in. I think it was late last month. I remember late last month in August that the Federal Reserve Chairman Jerome Powell actually now confirmed that there's going to be interest rate cut, and that was when we started seeing DXY, the dollar index. If you remember, from this candle started, I mean, we were sitting on this support right about here. It's right here. We're actually sitting on this support before that announcement. But immediately after that announcement, we had this crash. This one that happened all the way down. So because people were just selling dollar off, a lot of investors they were just dumping the dollars. So the dollar started crashing. So, but then if on Wednesday the Federal Reserve now, so 25 basis point has actually been priced in, if you ask me. So, but if on Wednesday the Federal Reserve now said, no, that we are going to do 50% basis point, we are likely to see price crash further for the dollar. But if not, you might see price just tap into this structural liquidity again and then continue to the upside. Because if you look at this market, if you've been around the market doesn't like people predicting what it wants to do. It doesn't like it. When there are too many people that are saying something to happen, the market has a way of surprising you. I've always said. So for me, any trade I'm seeing some trade, but I'm going to be closing out all my trades on Tuesday night. And then I'll wait to see what will happen on Wednesday. But based on the data we have now, based on the structure that we have now, today's class, I'll just talk about the structure that we have now. But if you are trading tomorrow and Tuesday, just have it at the back of your mind that there's going to be FOMC meeting on Wednesday, which is a major meeting where they're going to announce the new interest rate. So you want to be very, very careful, because nobody knows what the Federal Reserve will announce. All right. Well, Paraventure, like I said, I emphasize that if we don't get any surprise from the Federal Reserve, price might likely still play around this area before we have to push the upside. But structurally and according to market structure and liquidity, we are supposed to be pushing to the upside. That is for the dollar. All right. Now, if we check the Euro USD, we're actually looking at the pounds USD. You see that pounds has actually formed a support around this area on the daily time frame. So we are likely to see price range around this area for some time. Price might likely range around this area for some time on Monday and Tuesday, waiting for what will happen on Wednesday. So might see price range around this area to see what will happen on Wednesday. Wednesday is going to be a major move. Interest rate for any company is a big deal. So I'm not going to be joking around on Wednesday. I'll just sit on my hands, watch what the market would do. I might know if I'm likely not to trade on Wednesday throughout and just wait, see how the candle close for the day before I start trading probably on Thursday. All right. So now we are sitting on the support. Like I said earlier, for those that came in, if you look at my Fibonacci 2, I was actually expecting price to push further down into this 50% retracement before we have that uptrend. But then price, will do what it will do. So I'll watch what pounds USD and Euro USD will do on Monday and Tuesday. I might not trade them. I'm out of this trade. Also, if you look at Euro USD, see that it's pretty the same thing. If you go to the weekly time frame as well, see that it's still, although it's still looking like we want to come down, but I can assure you that what we are going to, the determinant of this market for this market is going to happen on Wednesday from that announcement. So I will say that let's check what I posted this on the group. And if you look at USD CHF, in fact, I made enough money on this structure since about 2 weeks now. Although I've watched it for like about 3 weeks, I actually feel strongly that we should be pushing forward from here. Is for this US, because this is if you look at what we have, this structure that we have there, this is actually the old structure for the whole year. This move that you see is actually what has happened since January from here. Since January till today. So and then we have already tapped into the structural liquidity for the downside, and then you see that we are pushed down further down to this side. So I expect price to actually probably come up to the discount zone, sorry, to the premium zone before we crash. So because this pair is actually a bearish pair. So where we are sitting right now, we are sitting on the support on USD CHF. But like I said, for USD base pair, Wednesday is going to be the major determinant. Wednesday is the major determinant. So whatever the Federal Reserve said on Wednesday is going to determine the move we are going to see. But if you ask me for USD CHF, I'm expecting to. This is a very strong bottom on the daily time frame. If you go to the weekly time frame, you see that what we have as well on this pair is also sitting on the support, on a major support. So I'm expecting price to push to the upside, at least to do 1-3 RR. I'm expecting 1-3 RR for this, at least to this point. Okay, if you look at on this weekly time frame from here, let's say from here to here is our swing structure. Okay, so I expect price price has already tapped into this and come down and form bottom and form another support by forming a sweep. So I expect price to push to this side again before crashing. All right, but like I said, Wednesday will determine. But tomorrow, if I see a very good entry around this area, I'll take a buy. I'll take a buy and I'll see what price will do around this area. That's for USD CHF. All right. So another pair I want us to look at is I quickly want us to look at USD JPY. For the JPY pairs, I think I posted one last week. I entered USD JPY, came out. I trailed that trade, did over 150 pips. I came out at around 120 pips. The mark, because I was trailing it, and it was a buy, and you can see that it has turned. So So for USD JPY, this move, I actually expect you can see that we are also sitting on our structural liquidity. But for this pair, majorly, this pair is going to be determined also by Wednesday, or what's going to happen on Wednesday. But for this pair, majorly, USD JPY is actually a bullish instrument. I think we've looked at the JPY pair so many times. It's actually a bullish instrument. If you look at what it has been doing for weeks, it's been doing this thing for weeks. See that it has been bullish. It's been a bullish. It's been in a very strong bullish trend, right? And another thing you will notice that what normally happens is that after each bullish move, we have a pullback. There's a mini pullback here. Then we have another one here. Then we have a major one here. You see, it's been printing higher low from here. Another one. Then now this is another one. So this trend line that I have here, that I just draw, you notice that this is the first time in about since 2021 that is going to break into this trend line. Most times it bounces off this trend line. It's been bouncing off this trend line. If you look at the long-term trend for USD JPY. But the question is, what has changed? And I'll tell you what has changed. The Bank of Japan, for the first time in a long time, has finally, stated that has finally increased their interest rate. The first time in about 30-something years, if I'm not mistaken. I'll need to check. For a long time, they've kept their interest low, very low. Their interest rate has been very low. So Americans will go there to go borrow money to come and invest there. And it was a feed. The Americans were just making money like crazy, doing what is known as carry trade. That time is called carry trade. But now recently they now decided that they want to start cutting interest rates. Sorry, they want to increase their interest rate. And that is why you can see that dollar is selling off against the Japanese yen. So, and ever since Federal Reserve has said they will cut interest rates, the Bank of Japan is about the only bank in the world. I think the Bank of England, they also cut interest rate on Thursday. Europe, Bank of Europe as well, they will cut interest rate. I think Japanese Bank of Japan is the only bank that have said that they want to increase interest rate, and that's why you see that their currency is strong. But plus or minus, I believe that even at that, I expect the USD JPY to still bounce off as time goes on. As that price, as we have that price, that interest rate when it's properly priced in. Okay, so I'm expecting a bounce, but I'll be sitting on my hands on this one to watch what will happen. We are seeing this pullback on this daily time. I think this is a weekly time frame. So this daily time frame as well, sitting on a bounce. So if there's a break of this support, we might push to the downside. All right. So basically that's that. Okay, let's look at also NAS. I want us to look at NAS 100. And if you want me to check any pair, let me know. If you want me to check any pair, please let me know. You can drop the pair in the chat box. So I want us to look at NAS. NAS 100 has been super bullish. If I'm not mistaken, I mean, is this NASDAQ? Give me 1 minute. Okay, this is one I'm looking for. Okay, good. Okay, don't worry. I'll look at good. So, okay, it's the same thing. It's been bullish. If you go to the weekly time frame for this, you see that we had this major pullback. We had this major. I think this happened during there was something that was released. I trying to remember what happened. So we had this major pullback, and the price bounced off, and ever since price has been pushing to the upside. This is for NAS 100. So like I said, a couple of weeks ago, that this pair is actually a bullish pair. So anytime it pulls back, you want to look for the bottom. But I actually missed this entry. I was actually after this bounce off, I was waiting the price to come. And price actually came back. But somehow I missed it. I was watching too many things. So, and you can see that it's been a tear for some time. Pull back, pull back, pull back, major pull back. So plus or minus, it's still what? It's still an uptrend. So this is a bullish pair. It's a bullish instrument. So you will do well to anytime it's pulling back. If you don't like I always say, if you are failed to catch the near the discount, the premium zone, you don't want to be selling this pair. If you are failed to sell it around there, you want to leave it alone and let it form bottom, as you can see. And it actually did that. It actually formed bottom, and then it's going back to this to go and take this high probably this week. All right. If you have a surprise interest rate cut, probably 50 basis points, we are likely to take out this high this week. But if you don't have a surprise interest rate cut, you might have, come to this area to test this area. All right. But if you see a very strong surprise rate cut, we are likely to take out this high. So I haven't said that. Let's check. Somebody said we check gold. Okay, let me check gold. I don't know who remember last week we were talking about gold, right? Well, hold on, let me I like to use this one. There's one here. Thank God I see how that thing. So last week we are talking about gold, and I was saying that I won't be buying gold around there. see what gold has done. And then I said if I'm selling around there, I'll also be careful. And the thing just took off. This thing paid me because I was expecting gold to at least to even come to this 50% basis for this place now. I was actually expecting to come to this area so that I can start buying. But it just took off like God. And where gold is right now is a price that gold has never been to before. So for someone that is asking for gold, please do yourself a favor. Don't even think of selling. So another thing you can just let's hope and pray that we don't have a surprise. Let's hope and pray that we don't have a surprise interest rate cut this week. If we have the normal 25 basis points, you might not see good moves done crazy thing. Because I feel that 25 basis point has actually been priced there. So let's now assume that the Federal Reserve now does 50 basis point. Gold is going to go bonkers. You are going to see price. You will see gold price pushing forward. One of the major commodity that a lot of investors invest in anytime Federal Reserve cut interest rate is gold. And that's why you see gold is behaving like, because everybody is envisaging what is going to happen this week rather. So we have a lot of dollar sell-off last week. So people were selling off dollar to buy gold. That was why we saw that gold actually broke out from this range. So but like I said, if there's no surprise from the Federal Reserve, you might actually have a pullback into this zone before gold continues that uptrend. But either way, gold is bullish. You don't want to be messing around with gold. So for me, if I see a pullback into this zone, I'll be glad to buy. But right now, my hands are off gold because I didn't enter gold on when gold was when I was supposed to have entered it. I don't want to FOMO in. You know what they call FOMO? Fear of missing out. So when you FOMO, say gold is going up and you buy, you just come down and then you're in a loss, big loss. And then I don't also want to sell. I'd rather wait because I know it's bullish. I'd rather wait for it to come down, to come to my zone, to my buy zone. Then I'll take a buy. Or if it doesn't come there, I'll just let it go. It's not the only instrument. So that is my own pattern of trading. And I mean, the past couple of years, I've been super profitable. So it doesn't bother me. I don't allow any instrument to bother me. If I don't get in when I'm supposed to get in, I just do my hands like this. Because if this market has dealt with you before, you know that you don't want to mess around. So I almost said that. Let's check Bitcoin quickly. I want us to check Bitcoin. Bitcoin as well, you can see that Bitcoin has been in this range for some time. I think since February this year, it's been ranging in this zone. And this is what Bitcoin always do after Bitcoin halving. I think I explained this on Thursday when we had our webinar. This is what Bitcoin always do. Immediately after halving, you have Bitcoin range around like this. If and waiting for a major move. Most times, especially when there's a news that there will be an interest rate cut next week. So we'll be waiting for what Bitcoin is going to do. So if like I said, there's a major surprise in that interest rate cut, you might see Bitcoin break out from this range to the upside. So if you look at what Bitcoin has been doing, the same thing it did. I think I mentioned this last week as well. The same thing Bitcoin did in 2020 during COVID. As you can see, I marked it out last week when I was explaining it. You see what Bitcoin did. So, but on the long run as well, maybe from now to maybe mid next year or end of next year, I'm still super bullish on Bitcoin. Because after halving, this is how Bitcoin normally behave. And I said last week that the reason why most times instruments follow the same pattern more often than not. If you look at the S&P 500, it's been in an uptrend for years. If you look at NAS 100, same thing. Is that as human beings, human beings don't like change. And our nature just like to we like to follow the same pattern. And that's what Bitcoin did as well, was ranging for so many months. Started ranging since March 2019, I think April, around that area, March 2019 till September 2020, for more than 1 year, and then broke off from this range after COVID. And during that time, the Federal Reserve, started cutting interest rate. We have price just shooting up from here, and price went from, I think price was around $11,000 or 12,000, and went all the way to 64,000. All right. So you can see that it's almost the same thing is playing out. If you go to daily time frame, almost the same thing is playing out right now with Bitcoin. So, like I said, for dollar denominated pair, the major determinant is going to be the interest rate reduction on Wednesday. So please don't use just keep that on your left hand side. Though. Somebody is say, okay, we should check Euro CHF. Euro CHF. Personally, I don't even like trading all this exhaust. We used to call them one name. All this is it exhaustive pay? I'm forgetting what we used to call it. There's a name we used to call them back in the days. Any pay that is not dollar based, because they can be very crazy. Anyway, it looks like it's sitting on the support. Let me see what is happening on the way. Okay, yeah. See, it's sitting on the support. I think it's been battling this trend line for so long. Okay, I marked it out. I think somebody asked me. So this support is a very strong support. So if you ask me, I'll be looking for buy around this area. I'm looking for buy around this area. But on the long run, let's see. On the long run, what's this instrument? This instrument is bearish. You can see that it's been playing around this zone since 2022. It's been around this zone since 2022. Yes, this in June 2022. It's been playing around this area, been bouncing around. So, and it's the way right now is looking. Any buy opportunity, just know that it's a retracement. But this is looking like it's time to buy. This area is the buy zone. Although we might have a pullback, we might have price pullback before continuing the upside. So we already have a sweep here on this daily time frame. This looks like our structural liquidity. This area looks like our structural. This looking like our structural liquidity. This is actually the sweep of the previous low. This one. So you expect price is likely to come and take out this structural liquidity before we continue the uptrend. Exotic, yeah, thank you, Bash. Exotic pair. You think just escaped my mind? Exotic pair, yes, they are exotic pairs. So these are exotic pairs. I don't like trading them because of because I just love to trade dollar based pair, because dollar is the most traded, is the most powerful currency, and is the most liquid currency. You know, all these exotic pair, they give me a lot of headache. If you look at Euro GBP, one crazy pair, you know, his pattern is just crazy. Look at this stupid pair. Went all the way. I think I called this buy. I posted this buy on the group. This one. On this week. Let me go to the weekly time frame. I'll see it properly. This particular one. Was this one. Remember, guys, I posted some couple of weeks ago. I trade them when I see a very clear on this exotic pairs. When I see a very clear entry, I'll take it. Right here, I took this buy on this weekly time, this particular one, and I posted it on the group. I don't know if you remember, guys. This Euro GBP, and now it's really coming down hard to take this swing structure. You know, if this play is old, it's probably to continue upside. All right. So somebody said I had to check crude oil. I think I saw crude oil. Okay, maybe this will be the last one we check tonight. Let me check oil. I don't trade oil too. I just look at it when people say I have to check it. Because the truth is there's so much, there's only as many as you can trade. There are too many. There are too many instruments to trade. The problem with this oil, which of them is it the futures? Wow. Who asked me? Joseph Agumbia. They tell me which if you can see my screen, I want to believe this one. Is it this one? Whereas this one, if it's this one, I mean, this is a very good setup. I might just look at it this week. I might not trade, but just look at what's going to do around this. But this is a very good setup for a buy. It's a very, very good setup for a buy. As you can see, we are sitting on a support. I think somebody sent me a mail. I was asking, why do I like to catch reversals? The question is, would you rather take a sell around this area? Why? Would you rather want to sell? Yeah, you buy. And this move probably when I don't know how the pips is calculated for crude oil, because I don't trade it that much. I don't trade. I've never traded it, so I don't know how it's calculated. So I mean, from year to year, if let's even say we have 1 to 3. Let's even say we have is 1 to 3. I mean, this is almost like to that point. So this is about 1,230 pips. It's around 1,000. I mean, this is a beautiful move that you might want to take. Okay, US oil WTI. Okay, let me see. US oil. I don't think it should be different from here, from this one. Okay, I've seen it. WTI crude oil. It's the same thing. Same thing. So I see that when price came here, this was in 2023, it went all the way up, right? And then we are back to this zone. Now back to this zone. So, and price has been bouncing around this area for some time. So this is looking like a very good opportunity to look for buying opportunity. So you know that your swing structure for this move is between this area and this area. This is your swing structure. This one. So this is your swing structure. Let me take this out. So this is your swing structure. So if I'm trading this pair, I'll wait for price. I either wait for price to come to me and to push down a little bit to this area, put my stop loss below the support and take a buy, or have my counter trend line properly drawn this way. I wait for price to break out and retest, and then I take a buy. So either way, I rather want to buy around this zone or after this breakout. Okay, and look for probably I do 1 to 5 or 1 to 4, 1 to 3, and I'm out sharp. So because this is actually a bearish instrument, price might still push further down. But before then, you want to just take a quick buy, probably 1 to 3, 1 to 4, and then and then you're okay. No, if you have a system, and then you will, if you've been following me for some time and you always see that I post my result on the chat, on the groups, on the channel, on Telegram, and on the WhatsApp group. One of the things is that my system, what I've been using to trade for some time works, say 90% of the time. So that's why I've stick to it for so long. So because if you have something that works for some time, you want to, and then you've tested over and over, you've back tested over and over, you want to stay with it. You want to stay with it. Okay. So somebody said Sunday said, when is a good time to trade in Nigeria in relation to American time, especially this USA? Personally, I don't actually believe in time. Some people will say you can trade that if you have seen a very good structure, a good setup, that matches your person, just take it and let the market make money for you. It was before I used to say, yeah, I don't trade on Monday. I used to say it before. I don't trade on Monday. I don't trade on Wednesday. Okay. If you understand, if you understand the market, there's no time that you can't trade. And before I say I don't trade on Monday, I don't trade that. They lie. Just if you understand structure and you understand the liquidity, there's no time you cannot take a trade. As long as, because the market will not tell you this is what I will do at so time. Although I understand why people say I'll wait for so time. Some people will say I'll wait for New York Open, because if you notice that after open, let's say during London session, when London open, probably Nigerian time, probably around that 8:30, 9 a.m. Nigerian time, one of the things you will notice that you have a lot of money moving in the market, a lot of liquidity moving in the market. You see you see a candle that will just go full, but if you understand structure and you already understand your basics of trading and you understand liquidity, you shouldn't bother. You already know where the market is going. But most time, what normally happens is that during each market open, during London session, New York session, Sydney session, the Asia session, what you see that at the beginning of that open, there's a lot of pressure. So you see price. Let's say price is going to the opposite side. What normally happens, that market makers, they will do this. Price will first of all come down, form support, and then do this. But if you understand structure, you understand what is happening. You will actually understand what is happening. That this is actually what wants to happen. So for me, it still bears down to knowledge. So it bears down to knowledge, and like I always say, nobody learns how to ride a bicycle the first time. You agree with me that the first time you got on a bicycle was not the first time you know how to ride, or the first time you got on somebody wants to teach you how to drive a car. It's the first time that's the first time you learn how to drive that car. No, it's a process. You have to go through that process. The same thing with trading. Knowledge, you have all these videos, like I always say, make sure you are watching them as many times as you can. Especially if you are new, number one, or secondly, if you are being unprofitable. All right. So I would say that I wanted to ask, how many people have opened an account with Axie? For a lot of people that are trying to open and get funded. Like I said the last time, I brought the director of Axie in South Africa, last week, and then and we are talking about the program. I think it's a bit. I've started trading with them. I'm still in the C stage. Although I've qualified to be funded $5,000, because I've made about, so far I've made about 16% right now. So, but because I've not taken 30 trades, So they've not funded me $5,000. So, and everybody starts at $500. That's one thing I like about it. So if you don't have $500, even if it's $100, 50, start with $50 and be trading and grow that money to $500, then you qualify for the program. You know, so if you have registered, maybe I'll drop the link in the group later. If you are registered, make sure you you get funded. Make sure you put some money in the account and you start trading it. Also, our course that is launching, I'm still thinking maybe this year or next year, I don't know. January, if I finish the editing before end of the year, I might launch it before the end of the year. If not, it'll be January. So for people that sign up in my link for Axie, I might give a discount on the course and also on the mentorship. You know, the one I've spoken about so many times. So okay, Mr. Falabi, try and get for it. Even if it's $50, just put in the account. I'll be trading it. Because the beauty of that program is that it's not like every other, I've said it before, it's not like every other prop firm. Every other prop firm, they will say, okay, if you put $50 and you get 10,000, but when you lose that money, you have lost that account, you have lost your money. But this one, you cannot lose your money, it's your money. As long as you don't have margin call, as long as you are trading the way you ought to trade, you can grow that account. And as you are growing, they are giving you money, and it's life. The money they are giving you is real money. And then give you some time. Let's say you get funded $1 million. My target is to get to $1 million about probably 1 year, 2 years. For that account, I'll just be trading. I mean, like I'm playing, because I have other accounts I'm trading. So I'm targeting probably like 1 year, 2 years. So that means, let's say in 1 year or 2 years, they fund me like $1 million and I'm trading that account. Don't forget that you even have $1 million, you must have $4,000 in the account, your own account. That means that's a very big leverage. That means your $4,000, you are getting $1 million. So if you do, let's say you do 10%, I'm just saying, let's say you do 10% in 6 months on your account, that's $100,000 that you have done on the $1 million account. And what they will do is that they will give you 90% of that 100,000, which is $90,000. So it is, I think it's worth giving it a shoot and giving it a try. All right. So that is that. During the course of the week, if I have any news I need you guys to know, I'll let you know. But like I said, please make sure you are keeping your eyes on Wednesday. Wednesday is very crucial to the global market. The first time the US is cutting interest rate in 2 years, and they plan to cut it, 3 times this year. So it's very, very crucial. It's a very crucial time for the global market, for the financial market in the world. So the whole world, uses dollars. So their eyes is on that Wednesday meeting. So if you are in any trade, I'm begging you, and you're not sure, just close it though, because Wednesday anything can happen. I pray that we don't have any major surprise. If not, if you have a major surprise, you see the way the market will behave. It can be very crazy. Interest rate, when the Federal Reserve is cutting interest rates, it can be crazy. So just be on the lookout for Wednesday, and then I'll be updating the group during the course of the week. All right. So thank you, everybody. Okay, Ezekiel, you say we should talk about psychology. That will be another time or not. Not today. So what part of psychology do you want us to talk about? What part of psychology, Ezekiel? Psychology is actually the most important part of trading. Like I've been saying, I've said this so many times. The price action signal. Well, I've been talking about price action. I'm talking about market structure, liquidity now. So what part of psychology do you want us to talk about? Your mindset, every part. Okay. All right, don't worry. Maybe I'll look for a particular webinar. I think we used to have that psychology webinar back in the days. I think early this year we were doing, I think once in a week. And a lot of people actually gain a lot from it because, like they say, trading is 90% psychology, 10%. In fact, some people say 95% psychology. That's your mindset. 95% your mindset, and probably 5% your skill. Because if your skill, if you don't have if you are very skillful, if you have learned, you've taken enough knowledge when it comes to trading, but your mind is messed up, you can never make money with trading. Because trading actually, especially except if you have not, if you have not been trading live accounts, you enter a trade like this, your mind will be doing like this. But the truth is, as you practice, you get less anxiety. That's what I found out with trading. Sometimes now it doesn't even bother me. I enter a trade, I go to bed. Worst case scenario, I'll lose. I know how much I would have lost, how much I would have thought already everything I'm going to lose. So it doesn't bother me. So that is due to practice. The more you practice, the more you practice, practice. The better you become, and the more accustomed you are to the game. You have to you trade to the point where the chart, they are now part and parcel of the chart. You see me that I'm using glasses. I don't used to use glasses. It's screen time. I have like about two. I used to have like about three screens. I just removed the second one. Right now, I'm having like two screens in my front. I have a very big one. This one's about 18-inch, and I have a 14-inch. Sitting right in front of me. So that's why I'm using glasses. And these glasses, my eyes is almost gone until I started using glasses. So, and because of time I spent with the screen. All right. So somebody say Quasimodo, don't worry, Quasimodo retracement. I've forgotten. Don't probably this. I'll look for time that we'll talk about it. We'll talk about Quasimodo retracement also. Very powerful, strategy as well. All right. So guys, let's call it a day. And the market will open in about 30 minutes. So I'll be keeping you guys. Like I said, my for this week, where I have my eyes on this really situation, I want to see, and I'm waiting to see how this price will. I expect price to push the upside for this pair, because it's formed sweep so many times around this area. All right, so I'm looking to take a buy around, but I'm watching. I'm taking a buy so many times around there. Taking about 60 pips or more than 300 pips on this pair, but it's still playing around there because of that Wednesday news. So I'll look at what's going to do between now and Wednesday and after that news. So I have my eyes on this pair because it's sitting on a very strong structural liquidity. I expect it to push to the ups at least to this spot, to 0.87. But like they say, market will do what market will do. So let's see what happens around this area. All right. So thank you, everybody. Thank you for gracing this. Like I always say, the first thing you want to do when it comes to learning is showing up. Very important. Showing up is very, very important. So for those that show up, thank you for coming. So see you during the course of the week. All right. Good night.